Hey guys, it's Saleh. Today I'm gonna show you a swing trading strategy that not only produces good results in a backtest, but it also has one of the best Monte Carlo simulations results that I've ever seen. As always, first I will show you the entry and exit rules of the strategy on TradingView, and then we will feed those rules into GPT to convert it into Python code so we can run some actual backtests on them. And before I continue, I gotta say I am not a financial advisor. This is a tutorial and you should always do your own research before trading. So with that out of the way, let's get right into the video. Now firstly, we want to ensure this is a trending market. For that, the best indicator that I always use is the ADX. So let's add it to our chart. Now we need the threshold of this to be 43. So let's add it here. So you see, I only want to take trades if the value of the ADX is above the threshold, like in here. Now, by the way, the time frame of the strategy is also the 4 hours. So make sure you set your chart to this. Next, we want to make sure it is an uptrend or a downtrend and take a trade according to that. For that, we're going to simply use 3 moving average lines. So let's look up EMA and add it 3 times to my chart. And then we're going to change the periods. First, instead of 9, let's use 30. Next, I'm going to edit this to 46. And next, I'm going to increase it to 80. Now also let's change the style of this to be more clear. So let's make this a little bit thicker. All right, so you see, I want to take a trade when the order of lines is like this. I want the blue line, which is the fastest EMA line, to be above the one that is slow, and both of them must be above the slowest one, which is also the thickest one here. Now again, the periods of 30, 46 and 80. And we also want the ADX to be above the threshold. So this would have been a valid trade, for example. So you could say this is a slow taking strategy, kind of similar to the turtle strategy if you've heard about it. So we're not going to be early in the trend, but because this is a swing trading strategy, we don't really care about that, because as long as we can catch a trend, that's good enough for us. So this would have also been a valid trade. So would have been this. So you see, in this entire trend, we would have taken 2 trades, which is really good. And that's it really. That's all the entry rules that is to it. And now let's talk about how to exit the trade. So first, let's remove this. Now for that, I'm going to use the ATR indicator, which is one of my most favorites. So basically this will give us an average number of how much the price is changing on each candle. So for example, if we had opened the trade, let's say here or whatever, this value here, which is by the way an absolute value. So in this point, it would have been 939.1, right? So let's zoom in a little bit. So we want to set the stop loss below, let's say, this value, but not just by 1, let's say multiply it by a value such as, I don't know, like 3 or 2. So that would have been, for example, in here, and then take profit, it would have been, let's say, here, right? So this is how we would have set it. So the ATR, you want to multiply it by a certain number and then add or subtract it from our entry price. Now, once you write the code, it will become more clear for you if it's not already. Now, because this strategy is not taking that many trades, I want to actually risk a little bit more. So I'm okay with risking 5% for each trade. And that is 5% of my capital, right? So it doesn't matter how many percentage it is from our entry to our stop loss. Okay, so what we care about is 5% of our capital. And for example, if I were to open a long position here and I wanted to risk 5% of my capital, because you see the distance between here until here is actually less than 5%, that means that we would have had to use leverage in order to accomplish that. So unlike what people think about leverage, which is, you are always risking more and it's always risky and dangerous, that's not really the case. Like sometimes it could actually be used in a limited way, and that is really helpful. All right, so now that we have both the entry and exit rules of the strategy, we can feed those into GPT to give us some Python code so we can run some backtests on it. Now to do that, you have 2 options. The first one is to use the cloud version that I made myself. It is basically the same GPT with custom models such as Cloud Sonnet, GPT-5 or whatever, but with some custom instructions that I fed it, specifically for algo trading in Python. Or if you want to self-host this thing yourself to use your own API keys, if you have some privacy concerns or whatever, you can check out my channel and watch this video where I show you how to do exactly that. So again, you don't have to use the cloud version that I'm gonna do, but it's gonna be easy for me, so that's the one that I'm going to stick with. Now, as for the model, I've picked GPT-5 Mini, which is also the cheapest one, and you can get started with it absolutely for free. So that's the one I'm going to use. Let's paste in the prompt. All right, so write a trend strategy with these rules. Go long when you have an uptrend and the ADX is above 43. For the trend, use 3 EMAs. A 30 period EMA is 46 period and 80. The trend is up when the 30 EMA is above the 46, which is above 80, and the current price is above all of them. Enter at price market, risk 5% of account per trade, set the stop loss at the entry price minus 1.8 times the ATR value. For take profit, use the entry price plus 3.3 times the ATR value. So you see, when I win, I'm gonna win bigger than when I lose. So even if the win rate of the strategy is gonna be like 40% or 45%, I'm still gonna sit at the win, so I don't need to win all the time. So that's one of the good things about a strategy, where your wins are gonna be bigger than your losses. And for short positions, do the opposite. That's it, very simple. Let's hit enter. All right, so it gave us the code. Let's copy the name of it, triple EMA trend, and go to Jesse's dashboard and generate a new strategy, and I'm gonna paste the name here. Now, here's the code. Now, you could edit the code right from within the editor of Jesse's dashboard, but what would have been better is if I open it inside a better editor such as Cursor or VS Code, which is completely free and open source. So let's open it there, and now we can read the code. All right, so you see, this is the base strategy code that Jesse generated for us. So let's go back to JesseGPT and copy this whole thing and paste it here. Now let's give it a read. So it defined a new property for EMA 30, and in it, it is simply returning ta.ema, which is the correct syntax within Jesse framework for defining an indicator. It is passing the current candles by saying self.candles, and the period of it is 30. Define another one for EMA 46, EMA 80, and then it defined the ATR, simply saying ta.atr and then passing the current candle. So you see, it is very easy to define indicators inside Jesse. And then it defined a new property for the ADX. And next we get to the entry rules of the strategy using the should long method, which is basically asking, should we go long right now? So in it, we just define some entry rules. So it's saying if the EMA 30 is above 46, EMA 46 is above 80, the price is bigger than all of them. So I find this to be a little bit hideous and unnecessary, but I'm gonna leave it as it is because it works. And you know, unless if the model makes a mistake, we don't really need to change it. And if the current ADX is also above 43, so this is perfectly correct. And then for the should short, which is for taking the short positions, is doing the exact opposite. So this is also correct, except remember that the ADX must still be above 43. So this is perfectly correct. And then for the go long method, which is where we define the position sizing, right? So assuming that the entry rules are correct, and now we want to go long, what should be our position sizing? What should be the entry price or the stop loss price or things like that? So we're gonna say the entry is the current price, which is a market order in other words. And Jesse is smart enough to detect this behind the scenes, right? And then for the stop loss, we're saying the entry minus the current ATR multiplied by 1.8. And then the quantity, we want to risk 5%, right? Now to do this, we're going to use the risk to quantity utility function of Jesse. And what it needs from us to calculate things is our current capital or available margin. So we pass self.available margin, and then the number 5 for the number of how much we want to risk, the percentage. And then the entry, which we defined here, the current price, and then the stop, which we defined here. And then we also need to set the fees. It's not necessary, but it's better to do it. For that, we're saying fee rate equals self.fee rate, which is the fees we're gonna pay in the current exchange. And then to submit the actual buy order, all we need to do is to say self.buy equals quantity and then the entry. That's it. Very, very simple. Now for a short position, we're doing the exact opposite. So basically for the stop loss, instead of subtracting the ATR, we are adding it. And also instead of self.buy, we are using self.sell to submit a sell order for a short position, which of course makes sense. Now, assuming that everything went fine and we are now sitting on a position, now's the time to submit both the take profit and the stop loss. So we're saying if it's a long position, and that is very simple in Jesse, simply say if self.is long, then we want to calculate the stop loss and take profit prices. Now, we didn't have to do it like this. We could have simply write it here, but this model shows this, and we're gonna go with that. So the stop loss equals the current positions entry price, which is the current price also, minus the current ATR minus 1.8. Now, by the way, the current ATR is what we defined here, all right? Now, the take profit is gonna be similar, except we are adding it by 3.3 times of the ATR. And now's the time to actually submit the orders. Now, this is the syntax in Jesse. So for a stop loss, we say self.stop loss, and then we pass the quantity, which we are passing the quantity of the current position, and then the stop loss. Now for take profit, still we're doing the same thing, but except instead of saying self.stop loss, we say self.take profit. And if it's a short position, again, very easy in Jesse, simply say is short. We do the opposite, right? So instead of subtracting and adding, we are adding and subtracting. That's it. Now, it is also doing something extra that I didn't ask. So it's saying it's using the update position method of Jesse, which we use when, let's say, for some conditions, we want to liquidate the current position. We don't want to wait until the stop loss or the take profit price is hit, but that is not what I wanted to do in this strategy. So this is extra, and I'm gonna remove it. It's also defined the should cancel entry method, and it's returning true. This method is used when we are using a limit or a stop loss order in Jesse, which is really necessary, right? Because let's say you submit your limit order, but the next candle closes and still your price hasn't been hit. So now you ask yourself, should I update the previous order or should I just leave it as it is? But because in this strategy, we are using a market order, we don't need this, and I can just remove it. All right, so now that we have everything, we are ready to run some backtests. Now, by the way, the LLM model added an extra PY here, so make sure to remove that if it happened for you, because that will cause an error. So let's go to Jesse, go to the backtesting page, change the symbol into BTC USDT, the time frame into 4 hours, and the strategy name must be triple EMA trend. And for the duration, let's begin since 2021 up until 2022 and the first month. Make sure the fast mode is on, and so is the benchmark. All right, so let's run this. And while that is going, I'm going to open another tab and start since 2022 up until 2023, run it, and then another one with 2023 up until 2024, and then 2024 up until 2025, and lastly starting 2025 until this month, which is September. So let's run it and let's take a look. So in 2021, this is how our equity curve looked like, right? So we took 14 trades, we ended with 78% profit, the max drawdown was minus 13%, the win rate was 71%. So that is really great for a strategy where the average win to loss ratio is 1.44. So this is really great. The average holding time is 265 hours. So that is definitely long. Now, if you are a swing trader, this might be fine for you, but if you are a scalper, you're gonna have a hard time holding a position for that long. So just consider this. And the Sharpe is close to 2. So I love these results, at least for this year. The Calmo ratio is also 5.63. That is really good. All right, so let's go to the next year for 2022, which was a bear market. And here's our results. So we ended with 67% and a max drawdown of minus 13. And this is for 2023. This is for 2024, and this is for 2025. Now, if I go to the benchmarking page of Jesse, we can see all the results next to each other, which makes it really easy for us to compare the results. So here is the max drawdown. You see all the numbers here. And then we can see the Sharpe and compare all of them together. Now, by the way, the max drawdown of the strategy is a bit lower than my risk tolerance. So we could even go and increase the quantity. So let's go to the go long method, for example, and we can multiply this quantity number by a certain multiplier, such as 2 or 1.5 or whatever you're comfortable with. So in case you were wondering, why aren't we beating the market? Actually, we are beating the market here a little bit, and also here, but in here we're not beating the ending P&L number that the market made for us, right? Like if we just held BTC, we would have made more. But with the strategy, we didn't make as much. But because the max drawdown number is actually really low, if we had multiplied the quantity or the size of our position by 3, we would have definitely beaten the market, right? So in case you are wondering for that, well, this is the solution to that. But when you do that, you also increase your risk. So that means if the strategy wasn't doing fine, you would have lost more. So you need to be very careful with that. But anyway, so let's go back to the benchmarking page, and we can see the start and ending dates to know which result this is. We can very quickly rerun one of the results if that's what you wanted to do. We can also rerun the entire backtest if that's what you needed. Let's say I change a certain part of the code, so let's multiply this by 1.5 for example, and also for the shorting part, and let's say I wanted to see how the results look now, right? So we just click on this, and now if I go to the result, this is how it looks like. So you see now we are almost beating the market. Now if I had multiplied by 2, we would have definitely done that. And here we're also making more, and also in here. Now let's also run another backtest. It's starting 2021 up until the ending date. Actually, I think I have a little bit more data because we're not in the beginning of September anymore. So let's run it like this. Now, by the way, if you didn't have data like me, actually in this case, you can just go to the import page and choose BTC. So let's do that and change this into Binance Perpetual Futures. Click on import, and you can easily do that. And you see it will skip the candles that already exist, and it will only try to fetch the new ones. So let's give it a moment to finish this. I want to quickly remind you guys about Apex, which is my favorite DEX, allowing you to trade perpetuals without providing any KYC while keeping the custody of your funds. If you sign up via my link, you will get 25% trading fee discounts. And you will also be supporting my work. Now that we have the candles, if I go back to the backtesting page and rerun this, hopefully it should go just fine this time. Alright, so this is the result of the equity curve. If we started trading this since the beginning of 2021, up until just a few days ago, this would have been how much we made. So 1,425% in profit with a max drawdown of minus 27%. So this is really great. The win rate is 54%. For a strategy with a profit factor of 1.4, this is really good. And then the average holding time is 118 hours. Again, be careful with this. You're going to need to be patient with it. And the Sharpe is 1.61, which is really amazing. Alright, so the results are really good, but the main reason I wanted to show you this strategy is the result of its Monte Carlo simulation. Now, if you have been following me, you know that recently I released a tool to run Monte Carlo simulations with Jesse, which is really helpful. So let's run that. Let's go and copy the name of the strategy and then go to that script that I gave you guys. Again, watch the video if you haven't, or check out our documentation. And then I'm gonna paste the name of it here. So the name of the strategy, the time frame is 4 hours, the symbol is BTC/USDT, and the exchange is Binance Perpetual Futures. And we don't have any data routes, so I don't need to enable this part. And for the number of simulations, I have picked 200. And as for the beginning of it, let's set it to 2021 up until, so basically the same thing that we did for our backtest, and the trading fees and everything else is just fine. All right, so let's go to the terminal, and I will simply say Python test Monte Carlo, which is the name that I gave that script. For you, it could be anything. Let's run it. Now, this is gonna have to run 200 backtests very fast, right? But I'm also using 12 CPU cores, so it should take approximately a few minutes. All right, so by the way, I'm getting an interesting error. The multiprocessing that I'm using is actually running out of space because I don't have enough empty space on my SSD or in my RAM. So let's stop this because this isn't going as fast as I need it to be. So we have multiple options. We can lower the amount of candles that we're gonna use, right? So let's bring this down to 2023 actually, because I wanted to include one bull market and one bear market. And yeah, so this should be fine. Let's give it another try. By the way, you might also get some other errors like this, and that is fine because you see, since in this simulation we are generating simulated data, sometimes that data doesn't play nice. So for example, the prices could be really low or things like that, and that makes sense, but we don't need all the backtests to actually go through for us to have a result that we can read, right? So let's just wait and see how this turns out. All right, so the result is 2 tables and 2 chart pictures that we're gonna take a look at. Now, let's begin with this one, which gives us the Monte Carlo of the trades. So what if we took the same number of trades, but the order of them were different? So instead of like winning and losing, what if it was losing and then winning and winning, right? So how would have our equity curve changed then? So let's take a look at the chart. So you see, this is how, actually in many of the simulations, we would have done better. But in some of them, but very few actually, things would have been worse, right? But also notice that the ending number for all of the equity curves, the original and the simulations, are the same, because these are the same trades. We're just changing the order, which will change the drawdown, which will also change some other metrics such as the Sharpe ratio, which is basically how much you're making compared to how much risk you're taking. So if I take a look at this, you see the max drawdown of the original was minus 20% for that period, but the median had a max drawdown of 32%. The best 5% had a drawdown of 17%, and the worst had 84. Now, you should never really read the worst because it's always like this. So I don't really think this strategy is gonna take this drawdown. And you see also the Sharpe is changing. Now, let's take a look at this part, which is the Monte Carlo for the candles. So basically, not only we run the same backtest on the original data, we also generate some new data based on the original candles. Now, this is a very complex but interesting topic. The method I'm using here is called moving block bootstrapping. So we're basically using the real data, we're just changing the order of them. And you could also assume that this is a way to stress test the result of your strategy, right? So let's take a look at this. So this would have been the original backtest, and these would have been the simulations. So the ending number isn't really great, but if you take a look at here, many of the simulations were actually doing better. So it's definitely good enough. Now let's read the table, and you see the max drawdown was minus 20% for the original. We already showed that earlier. The median had a max drawdown of minus 28%. So this is what I really like, because my risk tolerance allows me to take as much as minus 30% drawdown. And if the median of the simulations is only minus 28%, that means it's good enough. So even if I wasn't as lucky as the original backtest, the max drawdown would have still been acceptable for me. And in the best 5%, it was actually minus 70%. So it was even better. And what I want to see is if the original backtesting was worse than the best 5%. So I don't want it to be inside the best 5%. All right. Now for the Sharpe, for the original, it was 1.98. But for the median, it was 1.13. And you see the original is actually lower than the best 5%. Another way to read this is to forget about the original, just read what you see for the median, which is 1.13. And the question is that good enough for me to trade it? So what if I wasn't lucky? Forget the best 5%, forget the original. What if the median was happening? Not only that, even the worst 5% has a Sharpe of 0.04, which isn't great, but it's not negative. So you see, even in the worst 5%, I wasn't ending with losing money. So that means if I run this strategy long enough, it will hopefully generate me profit. Now, we never have 100% thing in trading. So don't think that if you're going to run this strategy, you will definitely make money. There is no printing machine. There's no guarantee in trading. But I like the odds that I'm seeing here. And you can also read the other metrics if you like to. But overall, I'm happy with these results. Now, something interesting that you should know is that I actually released this strategy more than a year ago on my channel and on our website. But this is the premium version of it. It was called Trend Swing Trader V2. So if you want to see the result of it for other periods or timeframes or symbols, you can do so. But one interesting fact is that back then when I released this, let's say you were wondering, does the result of it also work for future data? Well, now we have the result. If you were a premium user, you would have had access to the exact same thing that I just ran. And you would have seen that, let's say in 2025, the strategy, well, here it wasn't making much, but actually I don't have the result of more of them. All right, we do have it here. Let me open it. All right, so since the beginning of 2025 up until September, still it was making money, and it was also doing the same thing in 2024. So you see, if you wanted to do some forward testing, here it is. If you enjoyed the video, please consider giving it a like and subscribe to the channel for more videos and strategies like this one. Thank you so much for watching. I'll see you in the next one.